Hello, good morning, everybody. I'm Mohammed Ashik Khan, the Managing Director of Global Business School and the Managing Partner for Global Associates. After a long time, I thought of coming up with a video on one accounting standard. During this pandemic time, I thought it would be useful to all my viewers and my students throughout the world. So today I thought of pick IAS 40. Investment property, IAS 40. Investment property is a standard that is going along with IAS 16. That's property, plant and equipment. This is slightly different. That is investment property. Any property that is managed and maintained by somebody for the purpose of capital appreciation or rental purposes, to earn a rental income or for capital appreciation. If someone is holding a property for this purpose, such property will be investment property. Examples would be land, building, or part of a building. If suppose, for example, you have a 5-story building, and if you are occupying, if you are using 3-story building to rent out to others, and that three floors will be related to capital investment property, or it could be a land, it could be a building, it could be part of a building, or it could be both land and building. That is held by the owner of the building, the owner who would be holding the property, or the lessee as a right of use the asset to earn rentals or for capital appreciation purposes. You would earn rentals or for capital appreciation purposes or for both, rather than using the production of goods or supply of goods. Using the production of goods or supply of goods or services for administrative purposes, or sale in the ordinary course of the business. Actually, this here the reference they are talking about IAS 16, and then here they are referring to IAS 2. So this is not for IAS 16 purposes, or it is not even for IAS 2 purposes. Now, and then there is a type of property known as owner-occupied property. That property held by the owner for use in the production or supply of goods or services or for administrative purposes. The moment when the owner is reserving and separating a portion of the building or the property for his personal purpose, then that becomes owner-occupied property. Fair value, the price that would be received. This definition is derived from IFRS 13, fair value measurement. The price that would be received to sell an asset. Now, if you happen to selling an asset, and that the price what you will receive in selling an asset, or paid to transfer a liability in an orderly transaction between market participants at the measurement date. So that is fair value. And then we have cost, the amount of cash or cash equivalent paid or fair value of other consideration given to acquire an asset at the time of acquisition or construction. So this is what the cost is. And the cost we can arrive by an equation, the purchase price and directly attributable cost, that are any expenses that are required to bring a given asset to its intended location and workable condition, minus discounts, rebates, subsidies and so on. So that net amount, so this net amount will be the cost. Carrying amount, the amount at which an asset is recognized in the statement of financial position. How to calculate carrying amount? Cost or revalued amount minus accumulated depreciation and accumulated impairment losses, if any. Now, how we recognize investment property? Recognition of investment property. Investment property should be recognized when the following two conditions are met. It's probable that future economic benefits associated with the investment property will flow to the entity. Obviously, that is one major requirement. It is same like IAS 16 to recognize the property, plant and equipment. Also, this is the same condition. It is probable that the future economic benefits associated with this particular investment property will flow to the entity. And then the cost of the investment property to the entity the cost of the investment property should be able to measure reliably. So, if you can meet these two conditions, then you recognize the investment property in your books of accounts. Initial measurement. Now, once you decide to recognize the investment property in your books, then we have to find out initially how to measure. The investment property should be measured initially at cost. So, whatever the total cost you incurred for the investment property, that at that price you should measure it, and then you should recognize it. You debit investment property and then you credit cash or bank. Subsequent measurement. Investment property should be subsequently measured at one of the following methods. So there are two methods available. You can follow any one of these two. The first method is cost model, where you follow IA 16 and calculate depreciation and compute the carrying amount. How to calculate the carrying amount? The cost minus accumulated depreciation will give you the carrying amount. On the other hand, you can also use the fair value model based on market. You have to follow the prices or arrive the prices from the market, and then gain or loss of fair value should be taken to profit and loss account. Here it is important to note that if you do a revaluation under IAS 16, then the gain or loss on fair value is taken to other comprehensive income. But in IAS 40, the gain or loss on the fair value should be taken to P&L. So please note that difference. No depreciation to be calculated. We will not calculate the depreciation under fair value model. Once a model is chosen, that is also important here, that model should be applied consistently. Over the years, you should follow the same model. If you are choosing the fair value model for 2016, 2017, 18, 19 onwards, you must follow this. Unless otherwise, other model is justifies better, then you have to change, you have to do changes in accounting policy, and that has to apply retrospectively. The model should be applied to all the investment properties. That model must apply to all the investment properties that is available within the business. It must not be like you are picking and choose. One investment property you are following cost model, another investment property you are following fair value model. That is not accepted. Transfers. Now there is a possibility that sometimes you may have an investment property, at one point of time you may find it, no more this is an investment property and this has been treated as IAS 16 property, plant and equipment. Or vice versa. You may have a property, plant and equipment, and at one point you may feel the conditions are now meeting to say that this is no longer a property, plant and equipment, rather this is an investment property. So this exercise is known as transfers. So IAS 40 requires the accounting treatment to be followed for transfers to and from property, plant and equipment to investment property. Now if you look into this diagram here, so prior to transfer, this is the point of prior to transfer, that property has been treated under IAS 16 property, plant and equipment, and then on this point that we are converting or transferring to investment property. What you should do, transfer from owner occupied property or inventories to investment property. This is one category. So where you have either IAS 16 or IAS 2 to investment property. Apply IAS 16 up to the date of the change of use. So if it is property, plant and equipment, you need to apply IAS 16 up to this point, up to this date. Or if it is inventory, then you need to apply IAS 2 up to the date of the transfer. Apply IAS 16 up to the date of the change of use. At the date of the change, measure the property at fair value. We need to remeasure. Here at this date, we need to remeasure the property. Using fair value. So you have to do a revaluation, and then at the date of the change, the difference between fair value of the property and the carrying value should be treated as revaluation surplus or deficit as per IAS 16. That any difference you then have to take to other comprehensive income and a separate column under statement of changes in equity. On the other hand, you may have investment property prior to the date of the change, and then this is the point of change, then you may have owner occupied property. So here, any gain or loss, if a fair value model is used, transfer to profit and loss account until the date of change. And you won't calculate any depreciation under investment property when you follow fair value model. On the other hand, owner occupied property, we will follow IAS 16. Fair value at transfer date, depreciation commences from the date of transfer, and then cost or valuation model as per IAS 16. You will follow that. Cost for subsequent accounting is the fair value at the date of change. Apply IAS 16 or IAS 2 after the date of the change of use. Now you may dispose some of the investment property. If at all if you happen to dispose, then de-recognize all investment property which will be disposed when it is permanently withdrawn from use and no economic benefits are expected from disposal. Gain or loss on disposal should be taken to profit and loss. Any compensation for investment property impaired or damages or losses should be recognized in profit and loss account as other income. Disclosures, the related to choice of fair value model or cost model, criteria for classification as investment property, assumptions in determining fair value, the use of independent valuer, whether you are hiring an independent valuer to come and value the investment properties. Encouraged to have an independent property, but according to standard it is not compulsory. Rental income and expenses we need to disclose. Any restrictions or obligations, if we have to disclose that as well. If we are following fair value model, an additional disclosure will be an entity that adopts this must also disclose the reconciliation of the carrying amount of the investment property at the beginning and at the end of the period using the cost method. If you are following cost model, an additional disclosure, the depreciation method we are following, and disclose the fair value of the investment property. Now, this is all about the theory discussion of investment property. There has been various questions depending on the type of examination. I will pick and choose some questions from ACCA in my next video. Thank you so much for watching this video, and hope to see you soon in another video. Kindly do share this video, subscribe to my channel, and press the bell button so that you will get fresh content every time I upload to my YouTube channel. Thank you so much.